back, and 2022 has not been such a great year for gold as well. Gold prices hit a high of over $2,050 per ounce and then dropped to around $1,600 post the quickest rate hike cycle ever by the US Fed. Currently, gold is trading at around $1,800 an ounce. But what does 2023 look like for gold? The interplay between inflation and central bank intervention, that could, of course, be affecting the prices. So will geopolitical risks. And, of course, we will be looking at the kind of recession concerns that the markets have. But that's not all. The evolving variants of COVID-19 can also impact the prices. To discuss the gold trajectory and the key events to watch in the coming year, I am now joined by Vikram Dhawan. He's head of Commodities and Fund Management at Nippon India Mutual Fund. Vikram, hi. Thank you. Always a pleasure to have you on CNBC-TV18. What gold has done this year clearly has made a very huge range. 2,050 on one side and 1,615 on the lower side. What is your sense? Is this becoming a norm? Are we looking at such huge ranges going forward as well, year on year?
Thank you very much, Manisha, for inviting me to your show. I think it's very important to break down the various factors which are driving the gold prices. I mean, even if you were to sort of sort them into tailwinds and headwinds, if you talk about headwinds, which were dominant for most part of 2022, I'm talking about an exceptionally strong dollar, an unprecedented, rate hike cycle. That sort of, and also, the high volatility in the risk assets, which also creeps into most of the other asset classes, including gold. Gold is also not immune to global volatility, at least in the short term. So these were the headwinds which were keeping a cap on the gold price, and it was not helped by the fact that there was record ETF sellings in 2022. I mean, if you see from the pandemic peak till where we are right now, roughly about 600, 700 tons of gold has left ETFs, which is roughly about 12-13% of the global demand. So you can imagine the massive headwinds gold has been facing. And you may have had a lot of guests coming in and forecasting an absolutely cataclysmic, price action in gold, which did not happen because whilst the headwinds, which I mentioned, were short to medium term, the long-term tailwinds are getting actually stronger. So as I'll name a few. One is obviously the resilient physical demand. I mean, at least in the first half of 2022, it was actually quite surprising to see the physical demand, especially from the East. India was leading that. But most importantly, the central bank buying, and which needs some analysis, why central banks bought record amount of gold in 2022. I mean, central bank buying so far has been at 55-year high. Why are they buying? And the answer is threefold. First of all, despite the intellectual heft and data available with the US Federal Reserve, they have been way off target as far as the forecast of inflation is concerned. I mean, it's never easy to forecast inflation, currency, and interest rates, but I think it has become even more harder, and the margins of error have actually gone up. Right. Now, this creates a massive headache for those countries which are holding US dollar as the main reserve currency. I mean, their portfolio gets very volatile. Secondly, I think the messages from the US Federal Reserve itself has been quite volatile and very circumspect, which makes the job of central banks which are running massive positions in US dollar very difficult. Sure. Last but not the least, I think the geopolitical situation is still very fluid and very volatile. We don't know which way the pendulum will swing, but whichever way it swings, there is a distinct possibility that sanctions, we have not seen the last of sanctions. Okay. And in this kind of a situation, central banks of those countries which are forced willingly or unwillingly, have to keep relationship with Russia, whether it is for commodity imports or energy imports or for technology, they may like to diversify out of dollar, at least have some asset which cannot be directly sanctioned.
All right. That does look positive. Yeah. So, my follow-up question on that is, I mean, as you mentioned, there was a divergence in this year. We saw a lot of redemptions in ETF, but a good amount of physical buying, at least in the first half of this year. And as you mentioned, Vikram, that a lot of central buying has happened. Does it always, is it always the case that, the central banks start buying and then come in the funds and then come in the HNIs and then it is retail and ETFs that start coming in? Is that the cycle that we usually see in case of gold?
So I think this year was unique, and I mean, the anecdotal. It's very difficult to find very precise data because most of it is for the secrecy protection of the investors. But the anecdotal evidence suggests that most of the redemptions may have come from North America for obvious reasons. The currency was the only currency which was rallying, and everything else, whether it was yen or euro, was being sold against, and gold was also not spared. But as we go towards the end of the year, we have seen abatement of ETF selling. So I think, as I mentioned, the if the long-term tailwind, which I feel will actually go beyond next few quarters and may go to next few years and few decades as far as central bank buying is concerned and physical demand is concerned, then you have a situation in which, whenever that ETF selling reverses, you have a situation where the price action can be very quick on the upside, or at least the risks on gold price will shift massively to the upside.
Absolutely. So, I was looking at a lot of banks and brokerages and their outlook for 2023, Vikram, and the most bearish perhaps is 1575 on the lower side, and the most bullish is 2275, 3000, 4000, of course, is something that Swiss Capital Asia has talked about. 1575 to 3000 and 4000, and the expectation that the next 4 or 5 years perhaps could be looking at even higher record levels in case of gold. What is your sense when you look at all of these fundamentals? How are the next 1 or 3 or 4 years panning out?
So I think, the past 2 years have taught us the hazards of making forecasts.
Yeah.
And I don't want to be that person, with the last famous words. But I think if you see the trajectory of gold prices over longer term, they have traditionally been somewhere between debt returns and equity returns. And the leadership between these three asset classes tends to change hands every 2 to 4 years. And you've had 2 years of gold prices going nowhere. And gold has actually become undervalued. Now, it's very interesting. Somebody is talking about 1575 because all the new incremental, all-inclusive, prices, capacity which is coming, which is very close to $1,500, $1,600.
Okay.
So if we are going there, then maybe there is some other scenario which is being built into either a very, very massive recession or maybe a credit event which can take the gold prices over there. So I think I will say that compared to last year, where we are, end of last year, where we are right now, the short to medium term headwinds are losing steam. They will run their course over the course of next year, and the long term, tailwinds will dominate. And there is a good possibility that whatever mileage has been lost in the past 2 years, gold will be able to recoup it. And obviously, I cannot give a number on that because of the regulatory compulsions.
Sure.
But I think it's a matter of what is looking relatively cheaper out there, and I think gold and silver still are some of the very few frontline assets which are still cheap at current levels.
Okay, very quickly, a last question really, Vikram. So when we look at various asset classes, we've seen Indian equities just about being in positive 4 to 5%. The global equities have seen a double-digit percentage decline. NASDAQ is down by 30%. Dollar index, while has seen gains, but less than what the gold and silver seem to be closing in within the Indian rupee itself. Of course, the rupee movement has played a big role on what country you are in, and that really defines your position. So within a portfolio, how would you say the gold has performed for this year?
So I think good you mentioned about currencies, and one thing which the Indian investors may want to keep a watch besides the dollar index and the other data is the Chinese yuan. See, China is the most significant trading partner that we have with us, with India. And I don't think it is in our interest to allow the rupee to appreciate against Chinese yuan because that may further exacerbate the current account deficit. So there is a dollar price, there is a rupee price, but I think of all the things the investors would like to, or the analysts would like to follow, I think Chinese yuan needs a very special a following over there. Now, in terms of what happened to prices in dollar terms and what happened to prices in other currency,
Right.
I think this is something. The situation is still not very clear right now, because while we may have some sort of a recession or a technical recession, may or may not in the US, but whether you talk about the European economy or the Japanese economy or the Chinese economy, the view is still very hazy. So you're basically talking about what is the least worst currency or an asset you would like to keep in your portfolio. And I think gold there is sort of providing you a very good alternate.
It has.
Also, most importantly, from the Indian investor point of view, and I think this is something which I always try to impress upon. Gold is not a momentum play. Gold is just to take a leaf out of Mr. Warren Buffett's playbook. Accumulate gold when it is out of favor, and take some money out of gold when you feel or when it appears the world is coming to an end. So that is the kind of long-term approach you need to keep in gold.
And it's always said, it is always said, as you said, there has to be some gold in your portfolio. I mean, we can all try and debate on how much should that be. But yes, gold clearly has performed so well in this year when you look at relatively other asset classes there. But Vikram, with that, we've completely run out of time. Thank you so much for joining us today. And with that, it's a wrap on this edition of Commodity Champions. News continues on CNBC TV 18. Stay tuned.